All right, ladies and gentlemen, welcome to another episode of the Resource Insider podcast. As usual, I'm your host, Jamie Keach, and we are coming to you from the Torck Capital studios. Now, today is an interesting podcast. It's a little bit of a departure from the usual. We are talking to the gentleman from Torck Capital, a private investment management company out of Switzerland. And the two guys that are running this are named Simon Tobler and Mathias Maurer. And what makes them really interesting, one of the reasons I wanted to have this conversation today, is much of their background, much of their success to date is in the cryptocurrency space, blockchain, Bitcoin, Ethereum, that sort of thing. And they've got a tremendous amount of experience trading and managing assets in that sector. And yet they've decided to shift their focus away from crypto into mining commodities and metals because they feel today is the time to start allocating assets to this sector. And I wanted to talk to them today about what was the reasoning behind that, what they see going on in the crypto sector that, one, represented the opportunity initially, and two, the reasons that they think it's time to get out and to move on to something else. And finally, we discuss, what is it that is attracting them to mining and metals, and what do they think is going to be happening over the coming months and years? So if you're a generalist investor, if you've had exposure to cryptocurrencies, if you're just getting into mining, this is a conversation I think you should listen to because it gives some really good insights as to what these professional investors are looking at and thinking about, the problems or perhaps the overheatedness they're seeing in the cryptocurrency sectors right now, and why they believe it's a good time to get exposures to metals and mining and commodities in general. So without further ado, let me please introduce Torck Capital. Welcome to the podcast today.
Welcome, Jamie. Thanks for having us.
All right, guys. So there's a lot I want to talk about over the next hour. But for people that have never heard of Torck Capital before, can you guys tell us what Torck Capital Management is and what you guys do?
Yes, sure. We are in the process of setting up an asset management company and a fund which we will launch within a month. So we will start our fund 1st of April. And the idea is to invest very selectively in mostly precious mining metal stocks, junior mining stocks with smaller market caps between 20 to 500 million.
Okay. And part of what I want to talk about today, we will get into, how you're choosing assets, what you're looking for in the mining and commodity space, what drew you here. But one of the reasons I reached out to you guys is because both of you have a rather in-depth background and experience within the blockchain crypto space. And you've invested in there and you've worked in that space and you've made money in that space. And now you've transitioned or are in the process of transitioning to sort of, I guess, the hard asset mining and commodity space. And I think that's very interesting given what's going on in the world. And I'd love to get into what's driving that decision. But could you guys each give us sort of the background of who you are and what you do and kind of what led you here today? And Mathias, maybe we'll start with you on that if that's okay.
Yes, sure. My background is basically, I did, let's say, high school and college in science, then studied economic history at university. And this is basically the way I discovered the commodity space. I did write two papers, one of historical stock market crashes in 1929 by the end of the 90s, and was then also looking at kind of what did drive inflation in the past, and wrote a paper about silver inflation caused by the Spaniards that brought over the silver from the New World to the Old World around 1500. And basically all this led me to the point where I did look at the market by the end of the 1990s and basically see, we are repeating 1929 here. And on the other hand, we have a totally underdeveloped kind of broken down market in commodities. So I started heavily to invest in commodities early 2000 end of 1999. And this is basically what I did then for the next 10 years.
And Matthias, were you
And
in
now,
the as a professional investor at that time, or were you just doing this with your own money?
that was with my own money, yes,
Okay.
at that time. Yeah. On a professional level, I did build up a family office for a Geneva family, basically their office in Zurich. There I spent about 10 years building up that office.
Okay.
And then later on, yeah.
Sorry, carry on. I didn't mean to interrupt you.
Yeah, sure. But basically, then I went out of commodities roughly around 2011, 2012. Did build up some smaller asset managers, did build up an activist fund for a larger Swiss private investor. And yeah, basically ended up in the crypto space about 4 years ago, where I joined the crypto finance group as the first employee. I was in charge of building up the asset management, did also support the other group companies at the very beginning, how to structure the IT infrastructure, more general, let's say, operations. And came back basically about 1.5 years ago. I came to the point where I did see it reminded me a lot how it was like 20 years ago. And there I started the thought process, what do I want to do, like say the next 5 or 10 years? And basically all this, triggered to me the point that I said, well, I want to do again something completely on my own, not in a larger group. That was the first reason. Then the second reason was it was really like I did see this commodity, this looks like a strong cycle again.
All right. And Simon, can you give us a similar rundown of where you come from?
Yeah, sure. I have a background in finance, so I studied quantitative finance at the University of Zurich, then joined Credit Suisse, and have been with Credit Suisse for more than 13 years, most of the time as an FX derivatives trader. I was running the emerging market books for Credit Suisse out of Switzerland. And I got hooked up with cryptos or Bitcoin mainly back then in 2015 when I was looking for some, let's say, sound money alternatives in case the money system we had is going to break down, right? The whole debt levels, all those interventions, central bank money printing, etc., just led me to the conclusion that the whole system is not stable anymore, and we're running out of time, and something big will happen. And I was looking for alternative investment space. In what could I invest for such cases? And I discovered Bitcoin, and was very, very involved in the whole space as an investor. First with Bitcoin, and then also in 2016, 2017 time, also with a lot of ICOs, new coins, new concepts, new projects coming up, all in parallel to my day work at Credit Suisse. Also tried to get crypto up and running within the bank, but as you know, that never happened back in the days. It looks different right now. But back in the days, crypto in a large bank was just a no-go, right? And then I got approached in summer 2017 by the founder of Crypto Finance Group if I would be willing to leave the bank and start building up a trading desk, a crypto trading desk within the Crypto Finance Group. And that's what I did. I mean, I decided pretty fast to leave the banking world and joining this crypto world full time. And joining a startup and building up a new company. And that's where I met Mathias, and we did have been part of the management of that company for the last 3.5 years.
Okay, well, thanks a lot, guys. And part of me wants to talk about the move you've made into commodities, but I think it'd be nice to start, and you've touched on some of this already, Simon, of what drew you both into the crypto space, because you came from, it sounds like rather traditional finance backgrounds. And at the time you were coming into this, between 2012 and 2015, crypto was rather fringe, especially compared to where it is today. What was it that really drew you guys to putting your attention and your time and your career into this sector that was very unknown at the time, and like was it purely driven by this fear, like I guess a monetary fear that there's going to be a collapse in the system and you'll need an alternative asset? Was it interest in, I guess, the blockchain technology in general beyond just as a currency and what can be done with that? Was there a reason you you dropped what you were doing and really dove headfirst into this?
And maybe for me, it was kind of like a mix between my general interest in technology. I have been following Bitcoin before, but never invested it before I went to the company and started there. And basically just my background of building companies. I've built some other companies before, was key to build them up. And that's what I found interesting. And it was also the third point. It was kind of like our aim was to become the first crypto entity in Switzerland that is fully regulated by the regulator, which we achieved then about 1 year later after the start of the company. So that were basically the three things that brought me to this company.
And when you say regulated by a regulator, what was it regulated to do? Was it an exchange where people could buy and sell various coins? What were you licensed for?
No, this license was for asset management. It was basically the first license that FINMA granted to a company. FINMA is the Swiss regulator, to a company that was focused on crypto.
And I've wondered about this for a while, and not coming from the crypto space. When you're a crypto asset manager, what are people focused on? Are you focused on owning various coins that you think are going to increase in value? Are you focused on owning companies that are developing new products within the space? How do you build out a portfolio in this?
Well, actually, I mean, there are companies for all cases, like for both cases, right? Some want to be more liquid and basically are looking for the appreciation of all these coins. And then the other guys don't believe in the appreciation of the coins or are concerned about, money laundering, which is sometimes related or associated with the coins. And they go basically into technology, right? So you have kind of both ends of the space. Liquid strategies or pure, let's say, venture capital, private equity approaches.
Okay. And, are you guys still exposed to the crypto space today? Is this still a part of your personal portfolios in a major way, even though you're not, working in it full time?
Yeah, sure. I mean, we both still own quite a substantial crypto portfolio, and we are still both shareholder of the company we left.
And where do you think the crypto space is going now? I mean, is it, it's picked up obviously mass popularity over the last year, particularly it seems to me over the last few months. I can't look on Twitter or walk down the street without hearing people talking about a new coin or a new company. Like as an example, my wife's friend who works in theater, who I don't think has ever invested in anything now, is talking to her about some coin she needs to own because it's gonna pay off this debt or this. And when I start hearing that, I'm like, oh, that's a bit of a red flag. Like a light bulb's going off for me that maybe things are heating up a little bit too much. Like, what is going on? Do you guys know, or do you have a theory?
Yeah, I mean, it reminds me a lot of let's say, mid 2017. When you look back in the history of Bitcoin, then you see a clear 4-year cycle, which is sounded on the 4-year halving cycle of Bitcoins, right? Every 4 years, the issuance of new coins drops by half. And this halving is driving the whole cycle mostly. And as in every asset class, as soon as you get some nice price appreciation, people are jumping on it. That was same case 4 years back, 4.5 years back. And the last run back then, it was mainly ICOs, new coins, new concepts, new companies pouring out new coins, right? And today it's rather the decentralized finance space, and also large corporates that are coming into the crypto space and buying Bitcoin mainly for their balance sheet. So a lot of things just repeat, and I fully agree with you. The more let's say, normal people come into the space, the closer we are to, let's say, a local top. And with the volatility we see in crypto, yes, the top is not so far away, but in terms of time, but it could be still far away in terms of price.
So, okay, you touched on about 5 things I want to ask you about there. So I'll start with the first one. In terms of Bitcoin splitting, I have a very basic idea of how this works. Can you explain this to people who have not heard about this before? What happens every 4 years?
Okay, so Bitcoin, the Bitcoin blockchain is designed in a way that the miners who secure and process the blockchain get rewarded with fresh Bitcoins, right?
Yep.
And those fresh Bitcoin at the very beginning have been 50 Bitcoins per block. And every 4 years, this number get halved. So after 4 years, it came down to 25, then 12 and a half. And now in the current cycle, which started in May last year, we are down at six and a quarter Bitcoins per block.
So wouldn't that mean that it should become more expensive at this point because it costs more to produce each individual coin?
Yeah, the thing is, your reward in number of Bitcoin drops, but as the mining itself is still getting more and more expensive as more people are joining the game, the value of Bitcoin needs to rise just to make mining profitable at all, right?
And so is this rise up to $56,000 a coin or whatever it is today, is it driven, you think, largely based on this coming, I guess, increased scarcity of the product?
Yes. I mean, it's one of the very non-inflationary assets in this world, right? I mean, it's not deflationary formally, but maybe in reality it even is, because a lot of coins get lost, right? Get stolen, people losing their passwords, their seed phrase, etc. So I'm not even sure if it's still just low inflationary or even deflationary in the meantime.
So So once this gets hit, this sort of reduction in the production, what happens after that? Do you think? You talk about these 4-year cycles. Do people say, all right, well, it's 6 now, like let's take a break and come back to this in 3 years because we'll see, like the kind of I guess the drive kind of slows down at that point and we see a drop? Or what do you guys anticipate occurring, or what have we seen occur in the past for people not familiar with it, including myself?
Yeah, the thing is, Bitcoin is in a very fast adoption curve, right? Like internet or every new technology in the past, more and more people get interested in the technology, in the coins, in the whole concept. So you have an increasing demand, and then you have a supply which just drops by half just overnight on a specific date, right? So, I mean, that's something you don't see in any other industry. If gold price doubles up, you get a lot of miners getting more gold out of the ground or other resources just in general. But in Bitcoin, it's not possible. Fully independent of the price, the issuance of new coins is fixed in the algorithm.
Yeah.
So you don't have the usual concept with higher prices, you get more supply. Quite the opposite, your supply drops every 4 years. So you have an increasing demand, a dropping supply, and that's the main driver for this exponential price increase.
So is there any reason for the price to drop then going forward, or should it just keep going up, indefinitely based on that?
It's like with every asset. As soon as you get an exponential rise in price, you don't need much to change to get the price dropping again. Right, we have seen that 4 years ago. We have seen it in 2013 already. You have this exponential rise, and then out of a sudden, and there not even need to be a certain catalyst. There are just not enough buyers anymore to keep the price rising, and then people start taking profit, and then you get a sudden drop in price.
Okay,
and then like in every industry or every asset, you need some kind of time for distributing the asset again and building up fresh power, building up new technology, new players, etc. And then you start the cycle again.
So, and I'll phrase this question carefully because this is not investment advice. But if you were at home, if you did not own any cryptocurrencies, if you did not own any Bitcoin, is this a time to be thinking about entering into this space, or is it a time to be, kind of slowing down and waiting and seeing what happens?
It depends on your risk tolerance, right? I mean, if you have some spare money, you're pretty a risk seeker. Yeah, why not? I mean, you could build up a small portfolio, some Bitcoin, some Ether, some other coins with a solid concept, and hopefully, if you're lucky, you enjoy another half a year or 1 year of a bull run, which could easily double or triple prices, right? If you're willing to stomach the volatility, yes. Otherwise, if you need the money within the next couple of months, it's a tricky market.
So what do you think it is right now that is driving, I guess, established players in the finance space, in the corporate world, into Bitcoin, into blockchain? I think most famously we've seen Tesla buy, a big chunk of Bitcoin. I read something the other day. I don't know if this is true because I'm basing it off of a tweet, but it was something like Tesla's made more money off of Bitcoin in like a 3-week period than they've made in the entire history of their country, or their company rather, producing cars, which is hilarious. So, why are established players, do you think, starting to wake up and saying, shit, I got to own some of this? We're seeing funds, we're seeing banks, we're seeing companies. Why now? And what's going on?
I would say it's mainly a fear of missing out, a typical FOMO move, which started with let's say, a handful of larger hedge fund managers who started privately buying Bitcoin, getting into the space. And as soon as a couple of famous names are publicly doing it, then it's free and open for everyone else to do it as well. And if those guys are successful, a lot of hedge fund managers, money managers needed to ask themselves, okay, why I'm not doing it myself? Or why is my fund not earning money with Bitcoin and having a hard time with other asset classes?
So it just breaks the stigma here, basically. It's breaking the stigma, and people are getting FOMO and piling into this. Even the professional money managers that are paid to make rational decisions and not follow the crowd, so to speak.
Yeah, look, back in 2016, I talked to a lot of pension funds and other asset managers, trying to convince them to invest in Bitcoin, and the regular answer was just, hey, I can't afford it. If it goes wrong, if I lose my money, and even if it's just a small part of the fund, I get blamed for it, right? Because I did something no one else was doing, and if it's really 100x as you're telling me, then I'm not getting rewarded for it. So the whole incentive scheme was just asymmetrical for not doing it. And this has changed now. A lot of people now facing the questions of their superiors or family office, the owners, right? Why have we not invested yet in this new asset class, in this in this exponential stuff? So we need to do something. And now it's just quite the opposite than it was 4 or 5 years ago.
Okay, I've got a couple quick questions on this, or maybe not so quick questions. They might not have quick answers. DeFi, decentralized finance. What is it, and why should I care about it?
Just think of it as bringing all financial products, as we know it from traditional banking and finance system, onto blockchain and into a decentralized environment where not a bank is telling you which product you could trade or not allowed to trade, but rather the blockchain and smart contracts are just enabling you to do it whatever you want to do.
Okay. And so you're basically cutting out the middleman, and you're building it into the products to have that, I guess, safety mechanism or oversight that's able to track what's going on. Is that right?
Yes.
And so if we look into the future, 10 or 15 years, or maybe less, I don't know. Like, what kind of jobs, what kind of roles in the finance space do you think this starts to eliminate? Does it cut out the brokers or the bankers? Does it cut out the need for certain regulatory oversight? What problems that we don't know we have is this potentially solving, or at least that I don't know we have? Maybe you guys already know we have it.
I mean, it's difficult to say, right? I mean, no one knows. But at the end, as long as you're dynamic and creative, I guess you're gonna have a job in this new financial environment. But if you do a job which is quite repetitive, doing same things over and over, and doing something which a program could do, then it's getting tough, right?
Yeah.
I mean, for example, back office. There are so many people working in back offices of all the banks in all the world. I mean, a lot of these things could be just done by the smart contracts, just by setting up the whole product and processes directly onto the blockchain. You just get rid of all the back office people just doing all those reconciliations, etc.
You know, when I read about this, I keep thinking about, there's decentralized finance, but I wonder, is there going to be a point where it's more a decentralization of capital, right? And I think about so much of the investment industry. We're going to get into this in a minute, especially the mining space where we're focused at Resource Insider. So much of the profits in the venture space in particular are held and consumed by sort of the insiders in that space, right? The people that have access to the best deals early on at the best prices, and that are not often available to the average person, are not available at all to non-accredited investors at this point. Is there and this is a very theoretical question, so you can tell me to shut up if I'm going off on a tangent here, but is this moving to a point where we're starting to be able to create products that allow normal people to access opportunities that were at one point really constrained by key influencers or key decision makers or people in positions of power? And I think, when I read about, and I'm rambling on here, but when I see what's going on with the Wall Street bets sort of world right now and this sort of democratization of capitalism, and I see the products that are trying to be created here, is there a world where these things start to get married and you're starting to see these access to opportunities spread to the more general public?
In theory, yes. But as always, in practice, it's a little bit more difficult, right? What we already see in the blockchain space is that a lot of the, let's say, good deals are again taken up by the ones that are already in the circle.
Yeah.
I mean, in theory, an ICO could be open to anyone and anyone could participate. But in fact, you see most of the companies, at least in the last 2-3 years, are doing first some private rounds, bringing in the well-known investors, and then just at the end doing an ICO like in traditional markets with an IPO. Right. And then you are back again. The already rich get the opportunity and the regular people just lose out. And then on the other hand, you also have the regulators trying to get their hands on this market and trying to protect the people, which in my view is not a protection, but trying to protect the people to invest in things they could maybe not understand. And then you end up with a system we already had in the traditional finance.
Yeah.
Where a lot of people just are not allowed to invest in certain products.
Well, you mentioned this early on in our conversation about in 2017, there was this massive rush of ICOs, initial coin offerings, where coins were being created for every company, every product, every, kind of harebrained idea out there. And looking at this in hindsight, most of these don't seem to exist today. And if they do exist, they have, nominal to zero value. We're not seeing that this time to the same degree in my experience from what I'm seeing. What are we seeing happen now? Is the space just becoming more mature and people have learned okay, we don't want to invest in these, bullshit coins underpinned by nothing? Or is there another focus that's drawing in the capital and bringing people's attention to it?
Yeah, I mean, people learned their lesson with ICOs, of course. If the market is really more mature overall, I'm not so sure. I mean, it's just different topics. Right now, NFTs are running the show, non-fungible tokens.
That's my next question. What is an NFT? And I want to prelude that because I was writing down questions today, okay, to like, what am I going to talk to these guys about? And I keep seeing NFTs pop up. And then literally 15 minutes before I got here, I got some email from Stockhouse, and I'm going to, the names of these companies can remain anonymous, but it's like two companies, they're getting together to start an NFT focused studio to create NFTs. And when I start getting shit like that, I just start thinking like, man, we are in a bubble. Like something weird is going on here. I've only even heard of NFTs like 6 weeks ago. Now I'm getting like new companies pitched at me. What the fuck is an NFT? Please.
Okay, look, on the Bitcoin blockchain, every Bitcoin is the same. It's like with cash, right? You have a dollar bill, and it doesn't matter which dollar bill you hold. It's a dollar is a dollar, and the Bitcoin is a Bitcoin, right?
Sure, yeah.
And NFT, as the name says, non-fungible. It matters which token you're holding, right? And now people, I mean, it's really, NFTs are the new kids on the block. And when I left the company a couple of months back, it was not a topic at all. It just really emerged out of nothing over the last 3 to 4 months. So I'm not really deep into it, but at the end, it's like art in the real world. You have something, right? And now you bring it onto the blockchain, represented by a specific token, and then you can prove on the blockchain that this certain thing, which could be a painting, an art, or whatsoever, belongs to you.
So it's like the original. It's like everyone can have a picture of Monet's like Starry Night up on their wall, like a print, but there's one original, and so the NFT is the original version, right? It's like that special baseball card or something like that. That is.
Yes.
Okay.
I mean, at the end, it doesn't matter which Bitcoin you're holding, but it matters which NFT you're holding, right?
So what do you guys think? I mean,
that's.
I just think like, okay, I've been horrible at calling technology trends. You know, when Twitter came out, I was like, this is bullshit. No one's ever going to do this. And clearly I'm wrong on pretty much everything in this. But when I see these things, I'm just like, is that going to be a thing? Do people actually want the original? Like, I'm hearing like there's NFTs that are going for, I don't know, hundreds of thousands of dollars of like a basketball shot, right? It's like some guy is slam dunking some basket, and they've got the original cut of it. I mean, am I just not getting it? Am I Luddite and behind the times here, or do you think that this is going to be a sort of digitalized, unique art product or something similar that's going to catch on? I mean, if I don't like it, it means it probably is going to work. That's kind of been my experience with digital products so far. So I'm skeptical of my own opinion here, but what do you think?
I mean, my honest opinion, I think like in the ICO area 4 years back, 98% of it's just getting away within a couple of months or years, right? And ending up worthless. But there are some use cases, there are some things that could make sense. And it's like with the internet and the .com bubble we had 21 years ago. A lot of things disappeared, but what survived the first wave became the big companies of the new area. And it's the same with the blockchain and all those new concepts and ideas.
So, I mean, from investors thinking at home who have no exposure to this, I mean, probably the prudent thing to do would be, all right, let's wait and see who survives this initial wave and consolidates the assets in the space and whatever. And maybe that's where the real opportunity is going to be in 6 months or 6 years from now, depending on how, the timeline over which that takes. Does that sound like a fair idea at this point in time?
Yes, I would say so, yes.
All right, good. We have gone through the totality of my knowledge on the blockchain and Bitcoin and crypto space right now, and I'd like to move the conversation into what you guys are doing today a focus on mining, on commodities, on hard, real things. A very, in many ways, a big departure from the crypto space, but there's also some similarities. Can one of you explain why now is the time you've decided to refocus?
Okay. Well, I would say now is the time because what you see is you see the first signs that the cycle is turning. And usually I always say you should be to a certain extent a contrarian, you know. What we discussed before, I mean, this market has clearly signs of overheating. The non-fungible tokens are selling at record highs. You mentioned the situation that it reminds you of situations a couple of years ago. I had a similar situation this week, actually, when the biggest Swiss tabloid, let's say, mentioned that, you know, now your grandmother can buy Bitcoin. You know, they started, one of the largest retailers in Switzerland started to sell a card where you can basically buy, you know, $500 worth of Bitcoin on it, you know.
Mm-hmm.
And the same tabloid called the top last cycle, let's say two weeks, you know, precision.
Now,
So
did
this
they
time,
call the
yeah.
top, or was them reporting on what's going on in the space? That was a representation of like, okay,
Yes,
now it's time to start to get worried.
yes, yeah.
Okay.
It's the famous thing that you also mentioned with, you know, this big picture on Business Week about that called the bottom, the, you know, the death of equity. Similar stories, right?
Mm-hmm.
It was really this kind of call, you know. They did a series 4 years ago about how to survive with Bitcoin in Zurich, you know, because it was very fancy at the time. And they report for a week about where can I spend Bitcoin, which was not much at the time. And basically 2 weeks later, the market crashed, you know,
Mm-hmm.
for good, for that cycle, you know.
So you're seeing the writing on the walls in terms of, all right, time to get out of the crypto space now. Refocus. Why mining? Why commodities? Why did you choose this?
Because to me, at the moment, it's a clear value play in comparison also to technology. And this reminds me, as I said in the beginning, very much of end of the 90s. You basically there was a huge premium paid for technology stocks and not for value.
Mm-hmm.
And you see now the first signs of the rotation for going away from growth momentum to value. Because just people get to the point, or investors, where they're getting feeling more and more uncomfortable about buying technology stocks at very high valuation.
So, okay. And what is your, I guess my question is, where are you guys going to be focused at Torck? You mentioned, I think earlier, that you were looking at sort of early stage projects. Is there a place in the mining life cycle that you guys really find is your niche that you think you can get the most value? How are you looking at the sector? How are you looking to deploy capital?
Well, I would say there are basically two parts on the cycle we are looking at. First is the early exploration stage, and the second one is the near-term production stage.
Mm-hmm.
Those are the two we are going to focus on and deploy the capital.
And so these are often, the area of sort of the famous sort of Lassonde curve, right, where you often see
Yes, exactly.
I guess, the highest potential for exponential returns at these sectors, right? When we
Yes.
make a big discovery, obviously, that's the time where you see share prices double or triple or go up by 100 times, depending on the scale. And then once you go from a non-cash producing asset to a cash flowing asset, right?
Yes, correct. That's basically the two sweet spots on that curve. Yes.
And is there a commodity or that you guys are particularly focused on? Is it gold? Is it, the base metals or battery metals? Where do you think we're going to be seeing the most potential over the coming years?
Well, we start the fund with a focus on gold and silver
Mm-hmm.
because we think short term, probably the monetary driven um, backwind or tailwind will be basically the big driver. But if you look out on a couple of years, I mean, we see a clear opportunity, obviously, also in copper. Silver has obvious hybrid function in the sense of like you can either go to, the whole whole solar power or also do the monetary part of the equation. And personally, I think probably what will be a big call over the next, let's say, 3 years will be the uranium sector.
Yes. Yeah. Yeah. We've been, heavily invested in the uranium sector for about just over 2.5 years now. And
So you're still waiting
early.
for the
We
big
were early
moment,
to it, for sure.
the famous being too early.
The first almost 2 years we were down about 25% on our investment. Now we're up, getting close to 100% now. But, I think, when we approached this sector, when we approached uranium, our goal was to come in and see somewhere between 4 and 5 time returns. And I don't think we're anywhere near that yet. And, I'm excited what does can happen. I would say still over probably another 2 to 3 years at this point. What I wanted to ask is, we've seen this pullback in gold over the last couple of months, right? We hit our highs last summer at plus $2,000 gold. It's recently come off to the high 1600s. I think, as of recording this, we've bounced back a little bit to 1720-ish. What's your view on this? Is this just, I see commentators coming from all sides that, this is just normal market volatility. This is a pullback. This is the best time to enter the gold space before the big run. And then there's the other aspect, which is, maybe gold's had its day. We've hit our peak and it's going to fall back down to $1,400-$1,500. Do you guys have I assume you have a view that there's obviously a lot more value to be had in precious metals, but why is that? Why do you think we're just getting started here versus the run is over?
Maybe Simon, you want to answer?
There are a couple of things. If I look at it from a technical point of view, chart analysis, etc., then everything we have seen the last couple of months is just a regular technical correction, right? Consolidation, and the move could and should continue. And then we have the whole macro landscape, where now really anything is really pointing towards, let's say, a more inflationary period than the last 10 years. I know even after 2008, we have talking about all those monetary intervention are going to lead to inflation pretty soon, and it didn't appear over the last 13 years. So why should it now? But all the central banks and the governments are now really keen on getting inflation up, right? And if the consensus is so clear and they're willing to print as much money as is needed to bring inflation into this world, they will reach their goal.
Yeah.
So, why should, let's phrase the question different. Why should precious metal be the asset class which is not profiting from a much higher monetary base? We see those prices running in equities, in bonds, in real estate, in cryptos, everywhere. Why should precious metal be left behind?
Yeah, and it does seem to be one of the few areas that's lagging right now. I live in Vancouver. It was recently ranked, I think, the second least livable city in the world in terms of cost of living. I think the average family here makes $56,000 a year, and the average standalone house, is north of $1 million at this point. And we've seen, I'm going to butcher these numbers, but we've seen since the pandemic, notable rises in housing prices here, like 10% or something like that, just on this year alone. And, I don't see it playing out in precious metals in the way that I would anticipate at this point. And the one we talk about at Resource Insider a lot, and, this seems to be a contentious subject depending on which side of the debate you're on, though, is silver. In that, yes, we've seen silver about double over the last few years, but we're nowhere near all-time highs in it, right? We've seen gold push past all-time highs. We've seen copper. Copper's above hit 420 the other day. I think 460 is the all-time high there. We're approaching that, but silver's still half of what it hit at its peak, around $50. So I think we're in for a big run here, at the very least in the silver space. I also would suspect in the gold space at some point in the not so distant future. But I do wonder, what are the catalysts that need to occur for this to happen? You know, when I see, you know, the U.S. government just say they're going to spend 1.6 trillion in infrastructure, in spending, in relief, and gold goes down on that, and I just think, you know, what is it going to take for precious metals to really have their day in the sun, and for people to start waking up and thinking like, you know, shit, this is something I need to own? Is it that this capital is being sucked up by the crypto space that would typically flow in there? What are your views on this? And I know there's no right or wrong answer to these questions. It's very speculative, but how do you guys approach these problems?
Yes, I think at least partially it's crypto stealing the show from precious metals. Yes, I mean, all those, let's say, famous hedge fund guys, prominent names, 10 years back, they would have gone into precious metals this period, in such a period. Right now, they're joining crypto. So this is, of course, at least part of the story. I expect that to reverse after the next local top in Bitcoin. And if you expect that in the next, let's say, 6 months, then the future should be much brighter for precious metals in the 2 to 3 years after that. Silver maybe is just catched between different stories, right? I mean, if people are joining crypto instead of precious metals, the one that are still joining precious metals or going into precious metals maybe just buying gold and not silver anymore. If I just allocate half to precious metal that I would have allocated 5 years back, then this half is going into gold and not silver. And maybe the same is true on the industrial side. I mean, if you believe in a commodity boom led by base metals and all this electrification of anything, then maybe you're going into copper and different base metals and not into silver because it's more a precious metal.
Yeah.
Right. And so that might be the reason. But I mean, I'm in your camp. I'm expecting a huge run up in silver as well. It's just a matter of patience.
Guys, a lot of the people who are watching this podcast are retail investors at home. Some of them have a lot of experience investing in general and in mining in particular. Some of them are very new to this space. And, you know, what advice would you have for someone that is looking to start building out a portfolio focused on commodities? Is there a good way to start doing that without taking on a tremendous amount of risk? I mean, you know, we talked earlier about, you know, investing in the early stage opportunities, the exploration stage opportunities. You know, that's a great way to make money. It's also an even better way to lose money if you're not doing it carefully. For people without maybe the technical or the financial expertise, do you have a feel for where they should get started or think about getting started?
I mean, again, depending on your risk appetite, the junior mining space is not for everyone. I have to say, right? I mean, if you want to have some exposure towards gold and silver and not buying the metal directly, you are better served with, let's say, the larger producer, maybe some mid-tier producers, just to be on the safe side, right? And if you want to enter the junior space for the potential, I guess some of let's say the larger funds or the larger ETFs are a good way to start if you don't have any time for due diligence. And if you really think you're up to something and you have the spare time to do your due diligence on the different companies, etc., then yes, you can do that. But it needs a lot of time to dig out the winners and getting rid of the losers, right?
Yeah, no, and I would agree with that entirely. And, you know, that's what we focus on all day at Resource Insider, is finding ways to help our subscribers get exposure to these things. But, you know, it's a full-time job for me, and we work with a lot of very talented people in this space. And even, you know, we don't get it right 100% of the time, that's for sure either. So for anyone entering that space, you know, do approach with caution. There's lots of opportunity there, but there's lots more to get it wrong. And do know what you don't know. If you're not a geologist or not an engineer or not experienced sort of evaluating these projects from a technical perspective, please rely on someone that does have that background, because I would say, you know, asking a junior mining CEO what their project looks like is very similar to asking a barber if you need a haircut. The answer is yes, you do, and the project's always great. So keep that in mind when doing your own due diligence. Gents, thank you very much. We were coming up on an hour here. Is there anything I didn't ask you that I should have asked you? Is there anything worth talking about that I'm missing here? No, there's a lot. For those of you just listening to the audio, there's a lot of head shaking going on. So, all right, guys, really appreciate your time. Simon, Mathias, thanks for taking a bit of time out of your day, and hopefully we can do it again soon.
Yeah, sure. Thank you for the
Thank you very much for having us.
My pleasure.
Nice day.
Take care.
Bye-bye.